It's Sunday, the 28th of July, 2019. I thought it might be a good opportunity to do a gold price update. I think we're due for a little bit of action here, breaking either way down of this recent uptrend, particularly with the Federal Reserve interest rate decision on Thursday morning, Australian time. I think that'll come out. The consensus is for a quarter point cut. I think there's a few people sort of still thinking about a half a point cut. I think if it comes in on that quarter point cut as expected, you might see the gold price fall a bit, at least temporarily, for a few days. I think it's probably we're just trending a bit down in the last couple of days of the week, and it makes me think maybe the sort of path of least resistance in the near term is down. It has held up quite well here. Every time it's sort of trying to approach that 1410 sort of area, it's getting a bit of a bounce, but I reckon it's gradually falling away there, and I reckon this little uptrend might break. If you remember the last couple of videos, I talked about the 2016 move, how we're experiencing something similar. Even then, you saw that had a big down day at a similar point after this move, consolidation. And I reckon that actually might have been a Federal Reserve interest rate decision there as well. And that tends to be these interest rate decisions tend to be quite sort of pivotal moments for the gold price and set the agenda for the near term. So it'll be about the minutes as well, and the speech that the Fed Reserve Governor gives as well, to give a bit of direction for future interest rate cuts too. But there was, I think, maybe in a couple of weeks ago, the market was starting to price in a 0.5% cut, and there's been some reasonably strong US data in the last couple of weeks, and I think that prospect has kind of diminished, but the gold price might still be factoring in. So that could be a reason why you might see it start to come off. Obviously, then it'll be about how well gold's able to hold up, and if it can hold above this sort of 1400 level, it might fall down a little bit further as well. But I think that if we can hold those high 1300s, I think that would still be probably a bullish sign for gold. Some of the stocks have started to come off a little bit in anticipation. I'll talk about that in a separate video today as well. So that's the US dollar gold price. Australian dollar gold price is going very well. You can see here, actually, sorry, this is the Australian dollar itself. It's really come down in the last week. It's made a sort of a beeline down for after hitting that sort of 70.5 range. That was sort of the near term resistance level. Previously the support level that it had broken down from, and that's behaved pretty well. And you're seeing some articles now. I think there's another article here that people are starting to factor in 0.5% interest rates next year. This is from Bill Evans, who's sort of usually one of the more forward-thinking of the bank economists, and he's saying 0.5%. So that's sort of coincided with the currency really falling away further in the last couple of days. And I think this is, if it breaks this 68.2's kind of been that 5 to 10 year resistance range, or support range, sorry. And I think if we get through there, anything's possible. There's kind of a bit of an air pocket on the chart here between that 68 and sort of 65, 66. So you could see it really sort of fall a bit further. I don't think the market's really factoring in a 0.5% interest rates by next year in Australia. So I think the currency is really going to come under pressure pretty shortly. Sort of trying to work off. It's been working its way out of this little consolidation period, but I think this is more likely to break down. It's not a bottoming action here. You saw it again in the period sort of October to April there, that 6 months of bottoming action, and then it broke down further, and I think we're going to see here again. I reckon the next leg down's toward that sort of 65, 66 cent level. Obviously, that'll be very positive for the gold price in Australian dollars if the US dollar gold price can hold up anyway. And that's what the chart's showing here. This is an incredibly strong sort of looking chart here, consolidating around above that $2,000 an ounce Australian, and really look like it wants to break higher the last couple of days. You could say this is sort of this little bit of a pennant here. That's maybe there's another $100 of upside potentially here, I think, in the Australian dollar gold price if it can break out of this consolidation. So that's quite a strong looking chart. I've had this upper trend line in here for a while, and I think we might get up toward that in the next few months. But for now, it's been extremely positive consolidation. Some of the stocks indexes are indices. The S&P 500's made new all-time highs above 3,000. Just keeps on inching upward. Can still go higher. I'm sort of ambivalent here, but I think we're seeing some pretty sort of people are starting to become complacent again about the stock indices. Very similar to what happened, in toward the end of last year, and and also in the beginning of 2018 as well. So no one's really saying this is going to be perpetually higher stocks forever here, just propelled by low interest rates. But could also see the Fed Reserve decision have some impact on stock prices this week as well, if they're seeing it as being more hawkish and not looking to raise rates as much as the market to lower rates as much as the market is hoping. Maybe that can have an impact on stock prices. The ASX 200 from an Australian perspective also pushing new close to all-time highs here, just battling the last top there of 2007. But I've had this long-term trading range in here that we've been in since 2009, and I think we're getting toward a nice little confluence of resistance levels here around that 68 sort of 50 level, the previous all-time high, and this upper trend line here. So I think I haven't been shorting this index. I've been I've tried not to fight the market for the last 3 or 4 months after sort of shorting it too early. But I think potentially there's an opportunity there as well to start maybe becoming a bit more bearish on the stock indices. This has really been a chase for yields are obviously being compressed and everyone's piling into to stocks. I know Telstra shares Telstra is often the one that a lot of retail shareholders will come into, and I think that was doing fairly well the last few months, and that's I don't see the prospects of Telstra having changed for quite some time. So to me, this is just driven by compression of yields and interest rates and people moving into stocks as an alternative investment, and I think that's what's propelling the index higher. And that's not a sign of strength to me. That's the sort of action you'd expect. It's perfectly rational, but it's not about looking at the actual prospects of a lot of the companies in the index. I think I read that Woolworths is trading on a PE of 27, for example, as well. And Woolworths is not a growth stock, so there's a lot of potential crashes here for a few of these companies. Well, crashes, but they're becoming massively overpriced again. But anyway, that's sort of another discussion point. You could go into that forever. But all in all, I think the gold price action looks fairly positive still, consolidating above that resistance zone that it's broken out of. But I think we're probably due for a slight downward move here at least, maybe to get rid of a bit of a froth in the market, and But I still think that the fundamentals are extremely positive. And if we start to see some of particularly some of that US data start to roll over, it's only going to take one bad jobs number. I think the non-farm payrolls for August will probably be next Friday as well. So it'll be a pretty busy couple of days for the gold price. And if there's 1 week in a month that you need to watch, it's usually that in any 3-month period for the gold price, it's usually a period where there's an interest rate decision followed by a jobs number a couple of days later, which happens quite frequently. So you need to just be aware of that, and I think traders will probably be a little bit cautious ahead of that as well. So yeah, I'll do another video on some of the stocks and some of the moves that I see happening there as well. Thanks.